Hi, Warriors. Dollar mix, crude rebounding, low risk off. Bitcoin failed from over 10.8, and we'll see what's going on here on the rest of the markets. Hi, how are you, Ingmar? Mike and Ran. Hi, Ryan, Kman, AJ. Brand's excited. We have a full team. We usually do. Steve, uh, Kasub, Mokashi, morning. Welcome to Face. You found the right place to become an ace. And Kurt Bell, Blake, John, how are you? Timothy Jabin, nice to meet you. Welcome to Face. Sorry if you've been here for years and I'm not familiar with your name. Okay, so let's take a look at what's happening here. I added to Canada yesterday, so I just want to show you guys a few things. Okay, so here's Canada. So, we had this breakdown from the trend. There's a lot of people bearish. It still is diverging here on the 4 hour. It's got its hold now, really has to hold, or we're going to wash out any divergences. You want to be conservative, wait for over 136. Um, Take a look at the count that Grega has here. So I looked at it. I looked at it this morning. He has the same type of thing, a wedge here. Maybe it's an ending diagonal
Yep.
and ending
Well,
diagonal. Okay.
Uh, yeah, it could be forming, definitely. I just think that it can be some kind of a pause in the next few days. Maybe Fed will trigger all of the reversals here
Okay.
in
So
the next
Fed,
few days.
what do you think that would be? Because they, first of all, they don't cut rates, and so people will, start thinking that there's going to be less cuts. Is you think that's a catalyst? I didn't know you were here, Grega, but
Yeah, I just
you know,
joined
I'm
in.
just I'm just showing people how I use Forex Analytics, and you are, the guy that I check out the most for wave counts. So, although I have to admit that I put it on because I saw this and I go, I wonder what Greg is thinking here in Canada, and then I saw that, and it gives me a little bit more conviction about the trade because you're an excellent trader and a very good hit rate. So
Yeah,
since
and
you're since
since you
you're here,
mentioned,
why go ahead.
yeah, since you mentioned, I mean, regarding this potential reversal on dollar cat, I think that when looking at the big picture, it's very important to keep an eye maybe on the dollar index. And dollar index is basically having 5 waves of decline from that January highs. And
Right.
I can see that we are in this sentiment quite similar to what we have been looking at the end of 2024 on the opposite direction, obviously. And
Yeah.
we also are approaching summer months, and maybe there is just a perfect time to see some kind of a stabilization. We also have these geopolitical tensions, and
Yes.
I just think that maybe now it's perfect time to realize that dollar could slow down a bit. Also, stocks have seen a pretty nice move so far from April, and maybe if someone wants to have calm months, summer months, they will be booking profits here, and maybe this will trigger some dollar stabilization.
Yeah, and yeah, I know what you're talking about. We brought it up yesterday. The DSI on the Dixie has been in the 20s for I don't know how long now. And we even had a 17 reading last week, and the positioning in the market is what I'm counting on. Just too many dollar bears set up for a squeeze. So if you could see that kind of bounce in USD CAD, here's my dollar chart. We've had a couple of throwovers, but we're back inside here. To me, it looks like the same type of wedge. They look pretty similar, don't they,
Yeah.
Grega?
Yes.
Aren't they
If
pretty
you,
similar?
yeah,
The dollar in Canada?
Dollar index as well. Yes.
Yeah, there's the dollar index. Yeah. So, what's your view on dollar? The traffic lights are you still have it red, or are you getting ready to shift to
I just
neutral?
think that when looking at maybe some intraday wave structure on dollar index, I just think that there is one more push to the downside coming. I just think that 96 is maybe the key support, but definitely I agree with this potential wedge, and this wedge is just showing us that the dollar could really be losing that bears can be losing some strength down here.
Okay. And Blake brought up Euro yen yesterday, where it looked like it kind of had a stop hunt, but you have a little bit more to the upside. And I don't know why I'm showing your charts. When you're here, I could just hand it over to you. And uh, obviously, he came in here because he wanted to talk maybe about more than just a dollar, right?
Yep,
Okay,
sure.
you've got it.
Okay.
Dixie's 57% on the DSI? No way.
Okay, can you see the screen?
Yeah,
Yes.
Let me
got it.
confirm that, Dale.
Hey,
It
Blake.
is.
Yeah. I mean, it's euro dollar, right?
No, the dollar index on DSI is 20. I have 20.
Yeah, but
See
the
what?
person was not talking about the DSI.
Oh, I thought he just
Oh,
said DSI.
I wonder what he's talking about.
Just
Anyway.
the composition of the Dixie. I think. Yeah.
Oh,
Oh, euro. Oh,
euro
yeah, that's
composition. Got it.
all right. Yeah. Thank you, Arlo. All right, go ahead, Grega.
Yeah, I mean, like I said earlier, we have those 5 waves down for the dollar index. And basically, I'm preparing some article blog post for our website, ForexAnalytix, and I will highlight a few important things here. So we have 5 waves down, and
Uh-huh.
it means that we definitely should be aware of some stabilization. Then, if you look at the euro dollar, obviously we have 5 waves up here, and because a lot of traders won't trade dollar index directly, maybe through futures, but most of them will look at the euro dollar. So on the opposite side of that, we have these 5 waves up, and looking at the German US yield spread, we can clearly see that this one is coming to the downside here over the last couple of weeks, and this was actually since Trump made these changes to tariffs. So in my opinion, this is just another very important signal which could suggest that possibly the euro dollar is really in the late stages of this recovery, and that we could turn to the downside. Of course, we are not at the extreme levels yet when looking at the COT data of large speculators here, but this one is delayed here. As I see on the bar chart, it's from a week back. So I assume that now when we are at new highs, that obviously data
Yeah.
will show us higher levels, but now we will sooner or later move into that previous extremes, and this could be another indication that we really could come into late stages of this recovery, and that at least three-wave retracement or a slowdown here could unfold, and as I said, ideally through summer months here. As I said earlier, regarding stocks, I mean, here is Nasdaq 100. We can see a potential wedge coming right into that previous swing high. So definitely very strong resistance. There will be a lot of media calls that we are back in a bull run. But when you're at these big levels with this kind of a price action, I just still think that it's very important to understand that this kind of a wedge formations normally occurs at the late stages of this current smaller impulse. So again, I would just rather wait on a wave 4 rather than chasing something up here. Now, I'm not sure what Blake said about the euro yen, as you mentioned
Yeah.
earlier, but
Yeah.
overall, I just think that euro is coming into some serious resistance across the board. But once these yen cycles, if yen cycles will again change back on crosses. I mean, back to the upside when the stock market will complete some kind of a correction in the near term that I think will happen. I just still think that if you look at some commodity currencies versus Japanese yen, this one shows completely different picture. I mean, here is Aussie versus Japanese yen. And I think that this one is looking very, very attractive. I just still prefer commodity currencies versus euro or pound at this stage. I just think that commodity currencies can make some very nice comebacks in the second half of this year. And Aussie yen would definitely be on my watch list. We have a very beautiful ABC down from that 2024 peak, and you have a potential head and shoulder bottom formation here. But of course, 91.50, it would be even better if we can retest these levels, because in Elliott wave terms, it looks like that this could be some sub wave B rally, and I'm missing wave C
One more
here.
pull up. Yeah.
Yes. So this could maybe go hand in hand with the potential retracement on stocks. And since I mentioned that I like commodity currencies versus euro or other pound or maybe even Swiss franc, I mean, this one is looking quite nice here. We had a very nice strong push at the start of this year, as you know, out
Yeah.
of a triangle, and now we reversed pretty heavily, and looks like that we have some very nice bear flag here. Also ABC recovery right into this fib level. So I just think that in the next few weeks we could be looking for this pair to come to the downside.
All right.
Maybe
Okay.
one last thing, looking at maybe
Crude.
crude, yes, because of some volatile moves. So I heard last time on Bloomberg that crude oil could go back to could go up towards $200, and I just think that we definitely have been reading very similar stuff in 2022. And what I see is that crude oil is basically only in a corrective recovery here for a wave B. I
Right.
just think that 90-95 could be very important levels. So of course there's still plenty of time and price to consolidate within this price action within these current big ranges. But the idea behind of this cycle is because if you look not as an energy sector or commodity sector as a whole, I just think that this one shows much better and clear structure. I mean, here we have Wisdom Free, which is basically commodity index equally weighted, and looks like that's a pretty nice clear 5 waves down from that 2022 highs, and now you are now just consolidating, making a retracement that I believe will again come to an end in the second half of this year. So if I just consider what this one shows, I just think that
That
energy,
implies that WTI could do the same.
yes,
Yeah.
of
And you know
course.
what? Isn't it amazing how 2-3 weeks ago everyone was talking $40 crude, $50 crude, and now you know now they're talking about
Things in the
Armageddon.
markets can change very quickly, right?
Yeah. Well,
Yeah.
that was the longest I've been in a trade, because I started buying it on the crash in April. So
Very nice.
anyway, so 95 is still a huge move from here. That
Yeah.
means that I think that means that um, Israel's going to hit some more. They might go after the Iranian oil. I know they just hit some refineries, but
Yeah.
that could mean some type of at least short-term or fear of interruption of oil shipments through the Straits of Hormuz, 95 crude. I think that would do it. That would take it there.
Yep.
So,
Yes.
yeah, great presentation, Grega. And I can't think of anything you didn't cover. Oh, why don't we cover the one thing that is the most indecisive market for many months? Where are you at on yields?
In yield, I just stopped the screen share. Let
Well,
me.
you could take it back.
Yeah. Yeah. So basically, yield. Can you see the chart?
One more
Yes.
rally. Yeah.
I mean, we are just stuck in this range. I'm not
Right.
seeing breakout anytime soon here. Maybe we'll have to wait till September or something. But till then, I just think that this consolidation could resume. Maybe even we see some lower wave if dollar will keep moving to the downside. But overall, I just cannot see this as a bearish trend, to be honest.
Yeah, that's kind of, that's what I've been fighting with. All right, Grega Horvat, everybody. How about a hand for the Wizard of Waves? Laura?
Hey Dale, do you want me
yeah.
to I can take over the charts, but you can
Go.
you can talk to ask Kman and Ryan some of their overnight thoughts if you want. I'll just help navigate.
All right, let's start with Ryan and good morning, buddy, and the BOJ.
Morning, sir.
How are you?
I'm good, mate. How are you?
Pretty tired.
Yeah, I think it's the markets will do that to you, isn't it?
Yeah. So yen, BOJ,
kept rates unchanged. They tinkered with their bond QT program as was expected, so they're reducing that down in the coming quarters. Market pretty much took it in its stride. Nothing of note. On the policy side of things and the economic update side of things, they said nothing had really changed between the last meeting and this one. So we're no closer to hikes. The same uncertainty is in play as it is for everybody else. So no real change, and that's been reflected in the dollar yen price and the price action. It had a little run up into 145, the top of my zone, 145.10, just before the BOJ. Then it's pulled back down. It's had another little run up to 145, and it's failed there again. So it's looking quite well supported short term. But BOJ done. Move on. No trade deals either from the G7, which might have been a bit of a surprise. And why?
I thought that Starmer and Trump did something. I think that's what he said yesterday.
The first deal that's actually seen a pen hit paper with the UK, and not that it's seen the pound rallying to any great degree, if at all. But the first one. Look at that. Can we get a certificate to say we're the first trade deal done under Trump?
I'll make one up for you.
Thank you. I want something.
And someone came in too, since he's a resident there. Are you a citizen of the UK too? Kman?
Oh, good morning. No, I'm just I'm allowed permanent residency.
Okay. So where's your citizenship, in Belgium?
Yeah, still.
Okay. Well, that's a seat of the ECB, isn't it?
So no, they're in Frankfurt actually.
Oh, okay.
I've got absolutely no interest to go live in Frankfurt.
Okay.
Zero.
I do like Frankfurters, though. I know they're not healthy.
That's a different one. I do like their white beer, but no, Germany.
Okay.
Not for me.
So, what do you think of Looney down here?
Well, I'm just looking at the price action for right now and nursing my shorts, and I still think overall the break of 136.80, 137.20 is valid and may continue. I'm still looking for 134, and but
a lot of confluence there.
But I was saying as well, and writing it up in the chat room this morning, and I said it on the Flow Show. We are entering, first of all, two days of US data, and then the cherry on the pie will be the FOMC. So I'm not sure whether right now, the dollar will continue to come off. So I reckon with a bit of consolidation, barring surprises on the data, obviously, but the Fed is not going to move. And although somebody was trying this morning to open the door to a move, was it the guy from Wall Street Journal, Timmy Leaks? But he's not really a Fed whisperer, is he? But yeah, I think there may be a bit of consolidation in the dollar. until the Fed, barring surprises on the data. So I'm not looking for this thing immediately to come off. I'm even thinking there may be a bit of a retracement up to that 136, 1020-ish, and then we will see where we end up. Oil, yes, no, it did. The cat did bounce a bit when oil dropped, but not of the likes of like bouncing because of oil coming down nearly 10% from the highs.
Yeah.
So it's still living a bit on its own fuel, and that fuel may also be because there is still some hope for US-Canadian deal somewhere down the road.
Okay. Silver's at new highs. I know you were
Yes,
long.
sir.
Did you take it up there?
No, but I've put for a part of it. I put a trading stop really, really very, very close. If the prior high goes, I will just be trailed on a partial, and then hopefully I can buy back lower. But overall, yeah, this is looking good, and what we've been saying that it's looking better than gold is materializing. So
Oh yeah, they're
pretty happy
killing the
about
gold
that.
silver, killing the gold silver ratio.
Yeah, pretty happy about that. So yeah, I think gonna be a bit safe because we don't know on US data and the FOMC, but no, I mean for the rest, this is still bullish.
All right, let's go around the horn and end up with Blake. I know Grega showed his S&P count looking for a wave 4 pullback. You think we're there, Ryan, or do you think we have to make a new high first in the S&Ps before that happens?
I think we've got to potentially make a new high. I don't see any reason why we don't make a new high. Obviously, risk headlines aside of things, I'm still a little bit long. I bought into the risk headlines yesterday.
Okay.
I'm still a little bit long. Yeah, you know, any sign of this stuff calming down, pause, talking, negotiation, whatever, you're probably going to be up at those highs pretty quickly.
You think?
And what do you think, Dale? Do you think things are going to calm down?
No way.
You don't.
No, not for a while. Because I mean, really, the talk is, what has Israel accomplished unless they really completely take out the nuclear program? That their goal, and that they didn't score a knockout punch. Okay, things are still going, and could start turning into a war of attrition. So their goal was to knock out the nuclear program until they take out that one installation under Tordo or whatever it is deep inside the mountain. They could reconstitute their nuclear program. And so therefore, what did they accomplish? Maybe slow them down for 6 months, but then 6 months or a year from now, we're back in the same situation.
Right. Okay. Well,
right.
and so I was pretty skeptical about, the whole, Iran was wanting to get President Trump, or requesting to get President Trump to jump in the middle of this and calm things down. I'm like, man, those reports sound silly. But it seems like the market is, and we talked about this yesterday, the market is really looking past everything, saying as long as the US is not involved, then we can look past all this and, just continue on, just carry on. I guess my question is to you before I show a couple of things. Do you think the US is going to join this fight?
They have to if they want. They have to, because they need those Moabs, or and Israel doesn't have the bomber. But I think the U.S. should have joined the fight. I mean, the Iranians don't just say death to Israel; they say death to America. So why is it only Israel's fight? That's a question I have for the administration. And Donald, you could call me anytime. 760-916.
All right. All right. Hey, real quick. Jonathan asked about leaps. He's opinions on long-term equity option leaps. It's just, and I'm just going to give you my opinion about options just in general. Remember, you're dealing with a time decay product, and leaps you're just not going to get. Until it reaches whatever your option is and it reaches your strike price, you're just not going to get a lot of bang for your buck, if you will. But it gives you the flexibility of, making some pretty shitty decisions on timing too. So,
Yeah,
I don't have much of an opinion on leaps. The time that I would prefer to use them would be if we saw a major sell-off in the market. Like let's say we saw a 20-30% sell-off in the market. That's the time you want to be buying leaps on, you want to buy calls on everything, basically. But during extreme exaggerations in the market, not when you think, not like when we're a sideways moving market, you're just going to run out your time decay. You're just going to get time decay. So there you go. Um, and AJ says leaps are good for selling covered calls against them. Yeah, and if you want to do some complex
yeah,
options like that, yes, you can do that as well. But I tend to use leaps when I've seen a really big move in the market and I want to take advantage of a kind of a bounce back or a big reversal. So, and it has to be after an exaggerated aggressive move for me. All right. So, but we only have a couple of minutes before retail sales come out. I do want to cover just a couple of real quick things. We talked about the euro. Euro is very well supported. I'm so hoping, and if you guys watch the week ahead video, you guys know I'm looking to short the euro at 116.50 or maybe even slightly higher than that. It's a big level, goes all the way back to 2005, and that's a level that, should we reach above there or above, like a lot of people are expecting the Fed's going to be a little bit more dovish, that they're going to open the door for some rate cuts, some further rate cuts, into this year. I think the market's pricing in. Ryan, correct me if I'm wrong. One rate cut for this year, for sure, or we're pricing in, and maybe two. So if they can open the door for two or more, after the FOMC, if the market starts pricing that, we could get a continued strength in the euro, and I would sell into it. That's what I'm going to look to do, me personally. And like I said, correct me if I'm wrong there with that assessment. Also, following the dollar yen, or the Bank of Japan, we are in a very tight triangle. Soon as I saw that they're tapering, what was the number? Kman, 200 billion yen? Was that what it was? Or off the top of my
Yeah,
head.
they're scaling back from 400 to 200 billion, but they will only do it in Q1 2026. It's
So
not
I
right
mean, and
now.
it wasn't like some exaggerated number that they were
No.
tapering. So as soon as I saw that number, and I saw you were up, I was in the middle of trying to do some stuff last night, and we had some people in the chat room. You guys were all talking, and I was just like, I've seen enough. I'm done. As soon as that headline came out, I mean, and the dollar yen is stuck, and I think we're going to need some guidance here from the FOMC, and obviously. We're in a big triangle. I would be a seller up here at 146. I'd be a buyer down here at 143, and and then trade a break on either one of those moves.
Hey, Blake, can you put
Yeah,
Bitcoin up for a second?
sure.
So
Absolutely.
I'm starting to, follow crypto. I'm finally joined. That to me, it looks like another failing rally up around a little over 108. Actually took a shot at it, booked half B stops. I think it's vulnerable to take out that 100 level. And I know you've been talking about Wick. Okay, so
This right here is this right here. So that right there is that right
okay,
here. So
yeah,
if we do fail here and we break through 100,000, basically, that would
yeah,
suggest that we're in process of making our
uh,
way down this direction. That
wow,
that's when I turn bearish. So that's below
yeah, okay,
100,000. Yeah.
okay.
I do think it's a failing rally, but I'm not. And I spent like 5 minutes talking about this on the week ahead video. Oh shit, we're almost done. I'm
Well,
sorry.
yeah, go ahead. I'm sorry I called it
No,
too
no,
long.
no, no, that's fine. I just want to go over to Forex Analytics. Let's grab the calendar. You guys scream at me if the numbers come out before I get done here. We have 30 seconds. So here's your data flash. Let me pull that out of the way. We
I
got
bought
retail
some
sales
new
coming
underwear.
in. Awesome, Dale. Thanks for letting us know. All right, let
I
me
want to
just
goose it. I'm trying to goose retail
dollar yen
sales.
government bonds. Let me put the S&P there, and then I'm gonna miss all
Quickly,
this.
quicker.
Not gonna be able to do it. There's a retail
There.
sales, guys.
That's it.
Softer
That's
headline,
softer.
all
Uh,
soft.
Dollars in under
Oh,
pressure. Euros.
control group was up. That's the core sales.
Okay.
That'll offset
Well,
the
then
headline.
you know what, and that what happened is we saw a spike in the euro to new highs, and then it just reversed real quickly after that. S&P did not do much. It's come off just a little bit, but well, I don't have a really good read here. I mean,
yeah.
again, I was hoping that we'd see yields spike down and then they're bouncing back. I mean, I was really hoping we'd see a euro, closer to 116. I'd be more interested in doing something today if we saw that. But so why is the control group so important, Ryan? Really quick before you go.
It's more the core sales, so it strips out things, autos, gas, and other components that are not,
And Dale's underwear?
Yes, Dale's underwear is included. There you
I
go,
should have
Dale.
bought.
You sent retail sales higher with your underwear purchase.
I should have bought socks too. Anyway,
Well,
guys.
go ahead, Dale.
No, Rohit, will you please accept promotion? We're going to make you the president
There
of
we go.
Forex
We're gonna make
Analytics for
Rohit
a
the
while.
president. Hey
Please
guys,
accept.
overall, Rohit's coming in. Make sure you guys stick around for Rohit. He's one of my more favorite technical analysts out there. He's a great chart guy that's coming in from the other side of the world. So make sure you stick around for Rohit. But before we do that, let me just say that if you guys aren't checking out Forex Analytix inside the community, knowing that that I bought the Euro Aussie this morning, or knowing when here I'll give you another example, knowing when I got out of the Euro and what positions I was running yesterday on my short Euro. If you want to know like a running total of what I'm doing, what Ryan's doing, Kman, so many great traders in the chat room, and you're not having conversations about everything that's happening in the market. And you guys were just talking about Juneteenth. I forgot that Thursday, it's a bank holiday here in the US. We will be doing these shows. Don't worry. Even though the market might be kind of quiet, there's too much happening geopolitical wise. Dale, you don't have to be here on Thursday. You probably have an interview. I'm sure you're going to be here anyway, but
Yeah,
I'm going to be
probably.
here, and I know the guys from Europe are going to be here. So, but if you're not having conversations with other traders in the markets, seeing what they're looking at, make sure you're checking out Forex Analytics. It is $1 for 10 days to jump in the conversations with us. Make sure you download the mobile app so you get all of these alerts when the BOJ's leaving rates unchanged. You get all of those notifications right to your phone, right to your mobile device when these things come out. So, with that being said, Dale, is Rohit over here? Has he
Yeah.
come? He
He's
is. All
moved
right.
up.
Ryan, Kman, I know it's been a long night and day for you because you were up really, really early this morning. So thanks for being in the chat room despite not a lot happening. And Ryan, always good to hear your voice. And Grega, thank you for joining us today and showing us your Elliott wave counts on all of these 30 instruments that we cover, not just currencies, guys. We cover a lot of stuff, not just the currency market. So Dale, have a great interview with
All right.
Rohit.
Thanks, team. Ryan and Kman are Iron Men.
They are.
They're like Lou Gehrig of FX.
Thanks,
The Lou
Dale.
Gehrig of the
And,
markets.
Yeah.
thanks, Dale. You've just stopped the Fed from cutting rates with your underwear purchase.
Oh, good. That's good.
Trump's coming for you.
Uh-oh. All right. I gave him my number. You could call me anytime. I'd like to speak to him. And really, thank you, Blake and team. Good job, Grega. It's always a nice surprise when you drop in, buddy. So let's go to Rohit. Rohit is the publisher editor of India Charts. Rohit, great to have you back. Seems like a long time since so much has happened since the last time we got together. I hope everything's well with you. How's it going?
Things are volatile. Things are happening so fast that it will
Yeah.
feel like a long time if we even talk in a week, it looks like.
Isn't that, yeah, it's yeah, definitely over at times the action, the tape bombs are overwhelming, but that makes it more important than ever to pay attention to price in our charts because the noise is translated into what people are doing, voting
Yeah.
with their wallets, and price is king in any environment. I believe that.
There's
So
too, yeah, there's too much
yeah,
news flow that we really need to get our head around.
yeah,
It tests you on the other side of the knowledge and science of markets, which is in the behavioral finance space.
right.
Can you keep your cool mind? Can you execute based on what your charts are telling and not be affected by the constant bombarding of what the media is trying to tell you?
Yeah.
Uh,
And these interday swings actually could be opportunities for booking things or
yeah,
give you good entries. So it's not just one-sided that it's going to shake up your positions. It also provides entries and exits for you as a trader. So
yeah.
let's take a look at your technical work here, Rohit, and see where you're at. I don't know where you want to start. It's completely up to you.
Yeah, so it's a market where we are continuously changing sides. That's why I've written here the down then up market.
Yes. Okay.
Uh,
The down then up. Yeah. It definitely was. And you know what? Probably had more speed to the upside, except for it was a pretty, you know, grinding decline from 6,100 S&Ps.
yeah.
And until Liberation Day, and that was, you know, that was it. But the recovery is something I'm interested in I haven't seen the speed of a recovery like that maybe in my career. COVID wasn't like that.
Hmm.
You know, I'm trying to think of something to be comparable to what we had into the April low. Do you have anything? Did it seem like it was, you know, different this recovery? And they also said retail bought it, and the institutions are um, underweight equities at this time. But we'll start with rates. So
Yeah, we're ahead of the FOMC, so I thought the
yeah,
rate
yeah,
was the
go ahead.
first one I put out. And the setup looks like there could be a small uptick in the rates. I'm not seeing it big because as I get to the long-term chart, I do think maybe the fifth wave is done. But near term, we are gyrating inside this broad range, and I think one more push to the top end, closer to 4.89% is what I'm thinking
Yeah,
right now. But in the big picture, when I look at the overall pattern, what I see is potentially we ended a fifth. So one leg of rising rates is done. We are now just consolidating here. Maybe at some point of time we will eventually dip lower. So after some couple of swings, maybe we will eventually see it come down. I don't know how many swings before we do that.
yeah,
And if there's another rate cycle to the upside, it's probably later. It's not without a dip, is what I think.
I
Uh,
agree.
yeah.
So we look for one more shakeout. You know, your number is going to shake up a lot of people because everyone's really focused on 475. So, I mean, if we get to 489, there'll be people coming out of the closet saying 5 or higher. So, right? So,
Yeah. Then you'll
you
get
know,
all the DSIs hitting 90%.
yeah, something like that. Okay. I like that next one. That
Yeah, so
word
this is the
crisis.
two-year. The two
Okay.
years been interesting because it has fallen ahead of most crises or most recessions, whether it's 2000, 2008. This time we just haven't got the dip. I mean, it's stuck in this range. To some people, it might look like a triangle. It's slightly descending.
Yeah.
We are closer to the top end of the range. So I'm just wondering, after this small short-term spike, will we finally make this break to lower yields? That's the thing to really
Yeah.
watch out for.
Yeah, that's a nice descending triangle. I mean, it depends on how thick your red line is, but the form is there. So that would be So if we go to 479, those lows are what? 4% at the bottom of the triangle? What's that?
We'll have to
420?
do a quick check. Where are we?
Just a measured move off that descending triangle, what
Yeah,
that
so
would
it's
be.
around 3.48
Okay. 348 and
on the 2 year.
that's a 2-year. Okay.
Yeah.
All right. Okay, so that would take it down pretty good.
Yeah.
And you're saying that it breaks down, it's usually means a crisis or recession. I
After
wanted,
some time, I mean, not immediately.
yeah.
It's after the rates start breaking down is when the crisis usually show up.
And aren't most recessions, Mark Chandler says it's preceded by oil shocks? And are we in the midst of one? Even if it's a bear market rally to 95 or so and it stays there for a while, it doesn't just collapse to 40.
So it's a tricky
But
idea. So here's a chart of the oil price, since you mentioned oil and we are in the midst of
yeah,
this war. I draw a trend line on the WTI right from the top to this top, and that's what we are hitting, or
yeah,
these recent highs, and we are hitting these lines, and we are selling off from them again and again. So I'm really not sure whether this is going to be the oil shock unless we go above 78.
yeah, we will.
Uh,
Yeah, I think it's a break to buy. I'm just, there's still not a lot of bullishness in oil. I know it jumped, but there were nothing but bears
That
until
is true.
last week.
That is true. But then it's so geopolitical. So
Yeah, 95 is reasonable. Grega Horvat was in here, and that would still just be a bear market rally compared to where we were during the invasion of Ukraine, right?
yeah. That of course that we
So
were
if we
at
take out
130.
if we take out 77, I had that line too. What does that open the door in your work to if we got through
Oh,
77?
then I'll probably pull up a 61% retracement, gets us closer to around 101.
Okay, cool. All
Yeah.
right, now you can take over again. I'm sorry I'm interrupting you too much, but go ahead.
So with that, I'm just shifting gears to what is happening in India. And in India, bond yields have been in a broad range for more than a decade, almost 2 decades, I can say. And I think we are on the cusp of breaking down from this. So very different setup. We are not in an environment where yields go up. Every time they go up, they've cooled off. But it's time we finally break this range, and I'm anticipating we will. And rates will go much lower. Although the central bank recently cut 50 bips and said that we are done for now. We don't know whether we'll do more depending on the data. I think they'll find reasons enough because the inflation rates in India really dropped. The wholesale price index is down to 0.2%. They're only watching the CPI, which is at around 3.5, 3.3. I think there's a case that as the economy is still growing slowly, of course, we are still the fastest growing economy in the world, but historical basis, we are slowing. We will see more rate cuts. And I sense that it's a C wave. Basically, this is a very long-term chart I've taken from the 80s and 90s, where bond yields really peaked in 1996. And then after 2004, they've been in this broad range, which has become a triangle. So I'm anticipating wave C and probably 3 of C now, which is unfolding, takes rates much, much lower. And that is sort of what will trigger the continuation of the boom that we are seeing in Indian stock market. So
yeah, the Indian stock market is the world's top performing one, isn't it?
Yeah, it is.
Well, I mean, it's even blowing away Europe, which has been quite
Oh,
strong
Europe's a
too.
good fight. Europe's a good fight because actually, in terms of valuations, Europe appears cheaper. And they are
Okay.
also cutting interest rates. So I think basically what is happening is the US, which is in a tight spot in terms of the interest rate cycle, is allowing others to really take on the idea that they need to spend more. That means government spending is increasing in Europe and India,
Right.
and they need to cut rates. So the entire it's just been handed over from the west to the east. That's sort of what it looks like.
All right. Well, that brings me to where's your head at on the dollar, Rohit? Do you
Yeah.
see any kind of low setting
Uh,
up here? Oh,
No, I'll just go to the dollar
96.
chart. I do have it. So yeah, this is the long-term picture on the dollar.
Yeah.
Where I'm really looking at
Yeah. ABC or
ABC, and C is almost over because as you're seeing, sentiment got down to almost 17% on the DSI.
yeah.
Wave C also looks like a five-wave fall. We are in the fifth of that fall. So we are in the last leg. The only thing is it C or is it one of C? So this is the question I'm asking because
Me
we've already
too.
had a long dollar bull market. If we are in a dollar bear market, then the next bounce will only be a two of C, and then we will actually break this channel. So
Yeah.
this is the thing to watch out for.
Okay. So the dollar bulls, you know, do you give that a higher probability than it being the C wave and then we're heading up again?
So yeah, I am giving a greater probability to the dollar bear market having started.
Okay. All right.
Because that fits with the idea of what we see in commodities, precious metals, copper, all of them being in second waves. Of course, gold and silver are leading, but copper is still stuck in a second wave. Oil also, after its rally up to 2022, is essentially a long second wave. So I
Okay.
don't think in that environment the dollar should be in a runaway situation. But I mean, I could be wrong, but that's the thought.
Okay. What's cool about that is either way, there's a trade on the long side of the dollar. And
Absolutely, yeah. There is a
if you're
trade building up for the long side of the dollar in the near
right,
term.
yeah,
And that is
and
going to coincide with, I think, potential correction in equities. Uh,
okay,
so when I look at the world index, I'll just come to a couple of the indices. So this is the world index I was looking at, and I published this chart today morning. We're essentially looking at a five-wave advance from the bottom we made in April. There's a nice ending diagonal also to mark the fifth wave right on top. So we have this little ED. In fact, we have such an ED even on the S&P, Nasdaq,
yeah,
which is sort of reflected here. And I can see something like this on most Asian markets, whether it's Taiwan, Korea, all of them look like a five-wave up. So I think we are entering at least a pullback, which means second wave. If we say this is wave one, and we are looking at some kind of a second wave retracement, whether it's slow, fast, that I can't say, but something needs to happen on the downside before we can, pick up again.
blow off to the end of the year. Okay, that looks good. Where would that come in the S&P's wave
Yeah, so
two?
in the S&P, this, like I said, if it's the first wave, so this is the overall count from
Right.
2022. We've done a fourth, we are starting a fifth, we are just in the first of the fifth probably. The alternate is, I have an alternate count looking at the monthly chart, that this could even be the fifth. If it is, then this entire move is possibly just one, possibly just a larger one. If this is just five, and we'll just do a larger two, and then you get your third.
Okay. So how that would take it
But possibly not go below this. So in a worst case scenario, you're not going below 5,000. Eventually you will head towards 7,000 or so in the, I don't know, next year maybe.
Okay. All right. So you think we could pull back to
I'm
5?
saying that's the worst case scenario. I'm not sure you'll pull back that much.
Yeah.
If it is a second or fifth, you may just do a 50 or 60% retracement.
5,500.
Yeah, 55.
Okay. What else do you have going on? Is gold going to go to 3,700, or are we almost done there? One more
Okay,
high.
before we go to gold, let me just, since we're doing equity, let me just highlight the Nifty. That's
Sure.
the Indian index. The Indian index also has something similar where we've almost completed wave one. I think we can see a 5 waves on the hourly. So I'm sort of thinking this is the initial start. A, B, we probably get a C. It could get more complex if you do another X, another ABC. Eventually retrace maybe 50%, maybe 60%. And then you will get a third wave start somewhere, later into the year. It could happen sooner. It can happen from here itself, but we still
5
have some
breaks.
downside. We have some downside left.
Okay. So if you were an international investor,
Yeah.
and you had 100 grand to allocate, which bourses would you be doing it on? India, and what else on this wave 4 pullback? What other?
I think Europe.
Europe.
Europe stands out best next. Some people would say China, but I actually don't understand China so well too. And simply looking at the Chinese index, I can't tell much unless you can really pick stocks in China.
Or anything in emerging markets that would have your eye?
I would think Brazil. Brazil is a standout market, doing pretty well. Yeah.
Okay.
So I have picked a chart of. I don't know if you remember the last time I used the chart of the Sensex and Dow, and you quizzed me. You said that's not fair because I should compare the Nasdaq that has done really well. So I've actually picked a chart of the Nasdaq to the Nifty.
Okay. Thank you.
The idea is to just judge whether we are entering another outperformance period relative to the tech index, because this was a huge period where the Indian indices outperformed the tech, whereas prior to that, of course, into Y2K, the tech was doing well. Then the tech indices have done better than the Indian market. But into 2025 here, we've actually made a lower high in the ratio. So I'm watching very closely whether we can shift performance. Of course, this is based on the idea that yes, you're getting a dollar bear market, money moves out of US, Europe, emerging markets, and they actually outperform. So this ratio might actually give us a clue that has started to happen.
Okay, maybe that dollar bounce, bear market bounce, after completing one down, might give you that opportunity, right? Strong dollar would. Okay. Some real interesting looks. Look at this. All right, go ahead.
So that's gold. That's gold from 2001.
Yeah.
We had one 5-wave move pullback into 2015. Since 2015, we are in another bull run. If I take the size of the first bull run to the next, then eventually we are looking at $8,000 to $9,000.
Wow.
It may look like in this chart we are already in the fifth of this move. And that can get people concerned. People are writing to me saying the RSI on the monthly is at 85 and gold has gone too far. I say, okay, that may mean you get a short-term correction, but people probably have not seen how gold behaves in a bull market. So I've actually taken some very long-term charts dating back to the 70s just to show, and this is my own proprietary momentum indicator, but the point is to show how far can momentum really go. Because for an entire period here, I think since 2000 to 2020, the momentum did not really cross this line. But when you get an exponential move, and which is what is maybe starting to happen, then where can you really go in terms of momentum? So what looks overbought can remain overbought for a prolonged period of time. And I think people may not get a sense of what that really means. And to do that, I'll even pick the RSI since everybody knows the RSI so well. And here's the RSI chart. And this is a quarterly chart. And the last three major bull runs in gold on RSI keep it prolonged at the 90 level, either 90 and divergences all the way into this run. Again here, in this period, you saw it peak there. Once again in 2011, we've seen it go all the way above 90. Right now, we are in the 80s. So we're around 82. It can look overbought. It can feel overbought. But if it's a real bull market, then there's nothing that can stop it from getting to 90.
What about that we're not confirming this rally with a lower RSI reading? The divergence between the last two highs.
Yeah, so I wouldn't consider it a divergence because the wave count, this is 1 and 2. If I'm in a third, I consider divergences within the wave. So within this, I would consider divergences here. But such a long divergence, I usually don't give it a thought.
Too spread out.
Yes.
Okay. All right. The gold-silver ratio looks like a breakdown. Silver going to continue to outperform.
So here's silver. Silver is actually just completed a triangle which I've marked as wave 4 on the lower time frame chart. I can just show that it's a very, very interesting triangle because it has a deep through under, a deep shakeout over here.
Yeah, that was in April.
Yeah. So this shakeout was pretty deep and it held this low. So basically kept the triangle intact because that's the cutoff point where you can't call it a triangle if it breaks that. And now it's rallying away. So it fits the idea that yes, what we see here on the quarterly chart is wave 4 and we are starting wave 5. The channel goes all the way to around $60. So $70. So it's a long way up.
Yeah.
And the gold silver ratio is remained down for too long. I really don't know whether to look at this ratio or not, but it's there. Yeah, and it's still at the bottom end of the range. Sure,
92 was
if it can
important.
repeat this behavior, we can get that wild move in silver back. It seems to be happening. So I have not even projected what the size of this would look like. It would mean somewhere well above $100 eventually if we actually think it's a third wave of long-term degree.
Wow. Yeah,
But yeah.
so we have some pretty good inflation in front of us, don't we? Which makes it hard to believe that all we're going to do is that rates are going to behave themselves in this environment. Maybe they're the catalyst for it, is people not wanting to hold dollars, just buying everything because everything appreciates when the dollar is bad. Is
Yeah, I
that the
think
kind of
at
market?
some point of time that shift will be static. Right now, I think people are just getting used to the idea. Okay, inflation rate data is coming off. Oil is being held down with more and more production. I wonder if this whole thing with Iran is also about oil. You want to get the Iranian supply back on.
Everything's about oil.
On the supply chain.
Hasn't it? Everything been about oil?
Yeah.
I mean, I haven't seen one war over solar panels. Have you? Or windmills besides Don Quixote. You have a view on the Aussie? Do you follow the Australian dollar? Any of the commodity currencies?
So I used to. I have not given it a look for a long time because it got really tight.
Yeah.
And I'm not able to judge whether which way it's really going to come out of this.
Okay. All right. Well, you know what I'd like you to do is this is just a tip of the iceberg of what Rohit does. And he also teaches what he espouses and has some proprietary stuff that he offers his clients at India Chart. So why don't you show it? Take a minute, show your website.
Yeah. So I publish my articles every day at India Charts under various segments, and it hardly costs $10 a month to subscribe to these charts that can be on the app as well. So we do have an India Charts app both on Android and Apple, so anyone can download it. We've also recently launched something known as Strike, which is a data analytics platform for Indian investors, especially if you're looking at Indian data. Everything from participant positioning, which is like the CFTC data for India, or various diffusion indicators that people can look at, or sentiment indicators that people want to really track. So they can simply go to web.strike.money and try it out if they are looking for Indian data, whether it's breadth, whether it's diffusion, whether it's sentiment positioning, and of course the fundamentals of all the listed companies. So all the data we've put together.
Yeah, so I mean, it's one of the strongest markets out there. If you want to learn what's happening inside the Nifty, Rohit's a guy. So really, Rohit, I learn every time I see your charts, and really appreciate you over the years coming here and edifying F.A.C.E and showing your work. Thank you, my trading warrior brother.
Thank you. It's a great pleasure being here, and thank you for having me.
Yeah, have a great summer. We'll talk again in August, September, and may you and all your followers and subscribers have a bountiful harvest this fall.
Thank you so much.
All right, Rohit, follow him on X at the minimum, at India Charts, and do as much intelligence gathering as you can, and everyone has their niche, and Rohit's niche is over there, although he does follow what's happening everywhere. So remember, everyone, don't just count your international markets, count your blessings. See everyone tomorrow. Good hunting. You could join the team in 15 minutes on the morning edge and see what the dream team's up to. That's a wrap for me. Adios. Thanks again, Rohit. And you're very welcome, Stavros, Adam, Parth. See everyone tomorrow. Laura.